Now let's do a candle and price action deep dive. Some of you may be wondering why up until now we have looked at so many different tools, why there are so many videos about all the different concepts. And the goal of this approach that I chose is that first I'm introducing all of the different tools and concepts and ways of how we can make sense of charts, and then the ultimate goal is that we are learning to build strategies, and to build a trading strategy which will help us find best trading opportunities, we need to be able to combine the different tools. And that's what we're going to start with now, and then especially later when it comes to strategy design or when you watch the videos with the ready to use strategies, it will make way more sense. But this is the right approach, that we first study everything and now we are starting to put things together. And we can see how this works when you look at candlesticks. And we have looked at candlesticks, individual candlesticks, but when it comes to trading candlesticks or price action, we're going to use the concept of confluence. And confluence means that we're combining different charting principles or signals to improve the signal quality. So we want to find better trades, and we can improve that. First of all, we can say, okay, we want to start trading candlesticks. But we can say, okay, we only want to trade candlesticks if they make sense on the charts, if they happen in the right context. Maybe at a support and resistance level. Maybe the high-low structure makes sense where the candlestick appears. Maybe the candlestick appears around a pivot. Maybe at a moving average. And then we can also use candlesticks in trend context. Do they occur in the right trend direction? Do they occur in the right trend stage? Is there also the momentum confirming the trend candles? And that is then how we can use candlesticks, but go way beyond candlesticks and combine them with all of the different tools that we have used and learned so far. So let's get into the first example, and then it will become clear. So here, when we look at this chart on the most right, we see an engulfing candlestick, and it happens on the daily chart. You can see it here, 1 day. And all right, so a daily engulfing candlestick is quite a strong signal, but there's way more to that. And we can then estimate how this is a better signal than an average candlestick or not. So when we zoom out, you can see it occurs in an overall downtrend, which is good because the engulfing candlestick is bearish and it happens in a bearish context, right? So the market has been going down over the long term. That's good because the candlestick occurs into the right trend context or direction. We can also see that it occurs at a support and resistance zone. Previous support here, seems to be turning into resistance, which is a common phenomena, and having a candlestick occur at a support and resistance area is better than having a candlestick occur in the middle of nowhere. So we can see that we can improve the signal quality, and we could filter out, for example, candlesticks that don't occur in the right trend context or at the right trend location. And the idea behind that is that the more things that are speaking for your trade direction, for your trade idea, the higher the likelihood that you're going to find a successful trade. If, for example, you only trade a random engulfing candlestick and there's nothing else speaking for that candlestick, then the chances of finding a successful trade are not as high if, for example, you find a candlestick that occurs at the right trend stage, at the right support resistance level, in the right context, at the right level. And that's the goal behind what we do. We can add another moving average here, 50 period, SMA, really, really strong signal. And if you see that the market is pushing into a moving average, into the right trend context, and you have the rejection, even better. Very strong tool. And then we could take this to the lower time frame. We go now from here, from the daily chart to, this is how it looks on the 1 hour chart. And what we have here, we have the triple tap, high, 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 lower high, breakout sequence, retest sequence, retesting at the lower time frame moving average, retesting the previous support that's turning into resistance, retesting with a very strong candle, tweezer here, 2 rejection candles, and we move away from the level. So here, everything is speaking for this trade idea. And you can see how this is way more than just a candlestick. We go from just having a random candlestick to having it in the right trend direction, right at a perfect level, with a good moving average context, with the good lower time frame situation and pattern, break and retest. And then you can see how it unfolds. The market trends lower. And it all started with the engulfing candlestick into the right trend direction. Can take another example. Here we have deceleration at a previous resistance, right? So the market is moving into the previous top. And this is an important turning point because this turning point, marked the end of the uptrend and started this new downtrend. So clearly something must have changed here, that we went from more buying to more selling. The market is coming back and we see a reaction, right? We see a strong bullish candle with a wick, then a deceleration candle, a neutral candle with long wicks to both sides. So clearly something is changing here. We're on the 4 hour. We can go to the 1 hour, and this situation on the 1 hour looks like this. We have the trend line. We have here the rejection. So that's a good starting point. We have the level that we can use for a breakout. A few candles later, we see that this is turning into a head and shoulders. The left shoulder, the head, the right shoulder. We have the lower bounce breakout, very strong breakout candle. And now the chances of that this is going to roll over into a downtrend are quite high, because everything is really fitting together and everything is telling you a comprehensive story. Back to the higher time frame, this is how it looks. This is where we left off previously. We see a strong selling candle, a little buying candle, and then here you can see the selling sequence is breaking here, the higher time frame level. We can also see that we have a pivot change. If we, for example, now add the daily pivot point, you can see how this changes. During an uptrend, the pivot point will usually stay below the price action. So here, support, support, we reject it, here above it. But now it seems like the pivot point is becoming resistance, right? So we have lower highs, we have the resistance here at the pivot and the breakout candle. So many things are speaking for this to roll over. It's not just a random neutral doji candle. It is occurring at a major resistance. It's occurring after a mature uptrend. A lot of traders who bought up the market here are now sitting on a lot of profits. So those traders are also going to think about taking profits and getting out of the trade, which would contribute to more selling. And that would also turn the price over. So you can see it's also the trend stage, the maturity, how long is it? And what happens is that probably as the trend progresses, more and more traders start thinking about exiting. They may not exiting right away, but the first signs of weakness that you're going to see are now then turning those potential sellers into actual sellers. And then this effect is reinforcing. And you can see that often the selling, especially early on here, is often accelerating. As all of those buyers unwind their positions, this is adding a lot of bearish pressure. We have the breakout, moving average. Here you can see we have a second pattern that is building. After the initial breakout, there was not an immediate sell-off, but we get the second opportunity. We have the second support level. We make lower highs. This area never came close even to the highs, so still very, very bearish signal. And especially here, this liquidity run, remember what we did, liquidity runs back into the stop zones. So breakout, stop zone probably around here. We fish for the stop, we see a lot of selling. We have the breakout then, and then is where you have the impulsive wave. We have the first corrective wave, and then here we go off. So you can see how we started with the higher time frame candlestick up here. We were able to read that the market is turning over here. It didn't succeed initially, but we had our second breakout here. We then have another corrective wave that now occurs in the downtrend here at the moving average, and then we roll over. So you can see how we are already able, although we are pretty much just at the first or second module in this course, that we are already able to make sense of the chart in a very different way now. Now let's take a look at another example. Instead of using support and resistance as a filter, we could also use supply and demand areas. So here we can see there's a huge supply area here, and the market just moved into this. We have a 3 candle reversal, remember, strong bullish candle, neutral candle, strong bearish candle, mature trend, which is the key. The longer the trend has been going on, the higher the likelihood that we're going to see a reversal. Lower time frame, this is how it looks, right? We can see we have a long-term trend line here. We have a resistance level that turned into support. We also see when we zoom in, we have kind of a head and shoulder pattern. We make the higher highs here, we make lower highs here. We have a break and retest pattern of the structure. So you can see that we do see signs on the lower time frames that the supply area is actually leading to more selling, which it did also in the past, which makes all of this very likely to turn into a complete reversal. And that's exactly what we are after. We want to really stack the signals in our favor. We want to find as many things that speak for our trade idea as we can. You can see we can add the pivot, and the pivot shows us that we are now trading below the pivot. Here's the pivot, and if the price action is below it, there's a very good chance the market is going to roll over. If we can get now below the trend line, below the lows, that would be then the final signal. The breakout traders would be waiting for a breakout here into the new lows. And by that point, you're really rolling over. You had the head and shoulders, you had the first breakout, you're trading below the pivot, not even able to come close to it. We get below the trend line, we get into a new low, and by that point, this is then the final piece. You can see how the market really violently breaks it and then starts the new downtrend. And it all started with the market moving into the supply area. Then we had our 3-candle reversal. After we have seen this, then we can move to the lower time frames and start stalking our trade idea. We developed a trading plan. We want to see more weakness come into the market, and then we can think about what is the entry point. Next example. Here, what we have is a failed breakout, a mature uptrend. The market made a top here, tried to break above it, and now it seems like we are seeing bearish candles coming back. You can see we had 2 neutral doji candles after a breakout, and then the strong selling momentum, which is bringing us back below the highs. We also have our RSI divergence here, whereas the market made higher highs here. We are seeing the divergence, which indicates that not a lot of strength is happening here. Then, when we zoom in, we go from daily to 2-hour time frame. We see lower highs. We have the trend line break. We have the break and retest here. You can see that we are again seeing the micro pattern, strong bullish candle, neutral candles, strong bearish candle, right here at the previous breakout area. So at this point, this is where short traders get in. You go short here, your stop loss somewhere up here, and then you can see we have the first deep squeeze, and then you can see we fall over. So really, really common pattern. And again, we start on the higher time frame. We look for a candlestick pattern that we can recognize, that makes sense in the big picture, and then we can go down to find the microstructure and really start to analyzing on the micro level. Last example, we are here at a flip zone. So previous support here seems to be turning into resistance. We also drag a Fibonacci from the top to the bottom. We see this is occurring right at the 50% Fibonacci level. We see that we have an engulfing candle, and we see that we seem to be in a downtrend, right? We had a very strong push here, from here to here, very strong. From here to here, very weak. Remember what we did when we looked at wave analysis? If you see that you have a strong bearish wave, a weak bullish phase, it makes continuations to the downside more likely, because the wave ratio just tells you that there seem to be way more sellers than here the buyers. So we really want to be short. Just let's go to the lower time frame and see what it looks like. And here you can see we have the support level. We are already trying to trade around the pivot point. We have kind of a double top, and we have a very strong selling sequence here. A lot of strong bearish candles. We break below it. We come back, stay below the pivot, which is the key. You want to see that the market is really staying below the pivot point, which adds to this. Then we have another consolidation. And now the trading plan is very simple. Break and retest here around this area, which happens here. Break and retest. Again with an engulfing candle that happens here. And then off we go. So you can really nicely see how we can step by step really stack the odds in our favor. And then candlestick trading is way more than just looking at random candlestick patterns that you have memorized. You can make sure that your candlestick pattern really occurs in the right context, it makes sense, and you have other confluence factors that are all agreeing with your price analysis. And then we can say we have positive confluence. Later we will also examine negative confluence. So we would understand and look for things that would speak against our trade idea. And then you can make a pro and con list. What is better? Do you have enough positive confluence factors that they outweigh the negative, or do you have negative confluence factors which are too strong, which don't allow you to take the trade? But that's the next step.